Good afternoon, everybody. Going to go over our Forex trades for today, October 27th. We just had one trade. It's been really slow. We traded half our normal size as we usually do at the end of the month. It's been really slow. All eyes are really on the Fed, even with the economic data that came out this morning. We had durable goods and consumer confidence. We also had Case-Shiller, which is the go-to home index. Just the action just isn't there right now, unfortunately. Even last night, for that matter. Before we touch base on the one trade, which you're seeing here, let's talk about the economic data. Durable goods came out. If you back out the transportation, it was supposed to come in flat, came in with negative 0.4%. So contraction, not a growth. Another bad economic data point for the U.S. economy. That's the sixth consecutive month that core capex has collapsed. It's incredible. Case-Shiller index, you may hear that all over the CNBC and Bloomberg and Fox business, that it came out better than expected. It came out better than expected by 1/10%. Robert Shiller, I believe his name is Robert Shiller, was on Bloomberg TV, and he was saying that he's seeing conflicting data in the housing market, and he's saying that the economy is so slow that he doesn't expect the Fed to raise rates this year, and he says it could be as late as this time next year, where right now we have tomorrow's meeting, basically no chance of them raising rates. December, I believe, is about 32%. April is the next month that you get a 50-50 chance. And here's Robert Shiller from the Case-Shiller index, which is the go-to housing index, saying that he doesn't expect the Fed to raise rates until possibly sometime this time next year. So, and he's seeing conflicting data in the housing market, which is not a good sign for the housing market. Oh, and the other thing I wanted to touch base, last night we came across an article that, who is it? Sam Zell? Let me see. Yeah, Sam Zell sold. Now, Sam Zell is a huge real estate investor in the United States, and he has an uncanny ability to pick tops and bottoms in the real estate market. Okay. He announced yesterday that he sold 23,000 units, apartment units, which is a quarter of his holdings for whatever, I don't know the exact number, $5.9 billion or something. The point is that right before the financial crisis, a year, 6 months before the financial crisis, he sold about a quarter of his real estate holdings back then, whatever, again, I don't remember what the number was, but he sold a quarter of them. And then as real estate started to hit bottom, 2009 or so, he picked up more real estate. And now he just sold another quarter of his holdings again, which was announced yesterday. So we've been saying all along, housing, it's scary, what's going on. And we expect to see another dip. It's not going to happen tomorrow, but we expect to see another dip come in housing, another slowdown in housing. And again, we've been saying that the only reason why it stabilized in the first place was because of hedge funds. And here is not that Sam Zell is really a hedge fund; he's really more of a holder of real estate rather than an investor of it. But he does. You could see, as I mentioned, he'll take a quarter of his portfolio and he will flip it. Not going to flip it over a matter of 6 months or a year, but over a several-year period, he will flip it. So that was pretty interesting. It kind of backs up our thesis of what's going on in real estate market. What else came out this morning? Case-Shiller, we mentioned, and consumer confidence came out. Let me see what that was. Consumer confidence came out horrible. 97.6 versus an estimate of 102.9 in that index. So another bad miss in consumer confidence. Goldman Sachs, they lowered their third quarter GDP forecast again. down from 1.2 to 1.0%, and JP Morgan cut their third quarter GDP to just 0.6%. So just not looking good there for the U.S. economy, and we've been saying it all along and pounding the table. News did come out. Looks like the government, the Republican and Democrat, have settled on raising the debt ceiling. It still has to pass Congress, but John Boehner and I believe the Senate have approved it. It's amazing. It'll carry the U.S. It should carry the U.S. until about March of 2017. So figure, you know, a year and a half or so. They raised the debt ceiling to $19.6 trillion, and I find it extremely comical because not only do the Democrats just keep winning, but to me, both parties are doing the same thing here. It must be intentional because they can't be this stupid. It must be that they want to collapse the United States in some way, in some form. It's obvious, right? Why would you keep driving up the debt the way at this astronomical pace? And everyone, you listen to Fox, they blame Obama. You listen to the CNN or a liberal station, they blame the Republicans. Fact of the matter is they're working together, and this deal is actually showing it. The last deal showed it. Well, here's another one. Instead of trying to cut spending and figure a way to raise revenues, they're just increasing the debt ceiling. There's a little give and take here and there, you know, on spending, a little give and take by both parties, but not enough to make any measurable impact. They raise the debt ceiling. They don't figure out any new way to generate revenue. And now, get this, and now the United States is tapping our oil reserves. What we're going, not for our use and my use and your use, they're tapping the oil reserves to sell in the international community. So they're going to sell, how many billions of barrels of oil? It only comes out to about 2.8 billion. So they're only generating about 2.8 billion in revenue from this oil, the amount that they want to sell, when yet they're raising the debt ceiling 19.6 trillion. You know, you're talking peanuts to watermelons, for God's sakes. You know, not even peanuts to apples. You know, they're taking this little sliver and they're making it sound like it's a great thing. Well, first of all, how come you've never wanted to use our oil in the past? You don't want to let us, U.S. citizens, use our oil to put down prices a little bit when prices are spiking, but yet you'll take some and sell it to the tune of under $3 billion when you're running almost 20 trillion in debt. It's an absolute joke what's going on, and you have to say, well, yeah, you have to come to the conclusion. I don't see any other conclusion that both parties are in on it for whatever reason, whether that reason is to collapse the United States, collapse the U.S. dollar, bring us all on the same level playing field as the rest of the world. I don't know, but obviously both parties have the same agenda, and they just go about it a little bit differently in what they say and do in their actions. Because if any of the parties wanted to make a major difference, they'd stand pat. The Republicans, if they really were true into what they said, that they stand for, conservative spending and whatnot, they would sooner or later would stand pat and face the liberals and say, look, we're either going to default here, or you're going to really give a lot, and they're not doing that. So either the people that are leading the Republican Party are so scared to do that, or they have the same agenda. I can't imagine they're so scared to do something like that. Let's bring it down to the last hour, or even let's default. Let's default and see what happens after we default. Things will go into chaos for a few weeks, and then we maybe can make a deal within a few days after default. Whatever. They don't even try to do that. So I have to come to the conclusion that they have the same agenda. We'll see what Congress does here, but I think they're gonna end up passing it. Anyway, that's enough of my rant and raving. So let's get to the one trade, which was a full scalp on half our normal size because it's the end of the month. It was last night. We were long pound US dollar from 1.53548. And you can see what it was doing here. It just was trying to break out, but couldn't. and it came up to 1.5358, 59 or so on the bid side several times over. This is a 30-minute chart, so several times over the course of a few hours, and there was obviously a seller there, so we liquidated 1.5357. Is that what we really want to do? Of course not. You want to make more than 2 pips, but it is a full size. You know, so we'll take 2. We would take 5. We would take 8. We would take 12. We're only going to risk 15, 20, maybe 30. Then we ended up making the right decision because you can see what happened just by chance. And it really actually didn't really come down until I believe it was GDP from the UK came out around 5 or so in the morning, 5:30 in the morning. So, you know, we had plenty of time to get out while it was up here, 5.6, 5.7, 5.8, and you could have made money pretty easily. So that's it. We're going to wrap it up. Sorry, we went a little bit of a tangent this morning, but it really gets to me when I see these things that these politicians are doing. So let's wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll do another video tomorrow, assuming tomorrow is Fed Day, so we won't be trading. We may have some trades later today, tonight, but we certainly will not be trading tomorrow morning. You know, we never trade on Fed days. So we'll be back Thursday, assuming we get some action today, tonight, tomorrow night, and Thursday morning. So have a great rest of your day. And that's it. Thank you.